4 surprising ways you can lose money investing in cryptocurrency. And you can learn how to master your money down below. Number 1, investing in the wrong cryptocurrency. Okay, so when it comes to investing in anything, there aren't really clear-cut rights and wrongs. People have made fortunes betting on penny stocks and shiny new cryptos that don't end up going anywhere in the long run. They were just lucky enough to get in and out at the right times. But most people aren't that fortunate. It's difficult to predict which cryptocurrencies, if any, are going to stand the test of time and which will fall by the wayside. But you'll have better chances of picking a winner if you research each coin you're interested in. Try to understand what distinguishes it from Bitcoin and what applications it could be used for. Don't just jump onto the bandwagon and buy whatever's on a hot streak right now, or whichever coin has the best memes. That's a dangerous way to choose your investments because when the social media hype moves onto something else, you could lose a lot of money. Especially if you end up following someone like Elon Musk. Number 2, cryptocurrency scams. Just recently, the Federal Trade Commission, or the FTC, announced that more than 7,000 investors lost over $80 million in cryptocurrency scams from October 2020 to March 2021. With so many people interested in cryptocurrency right now, it's easy for scammers to blend in with the crowd. Some promise to offer insider investing tips, others pretend to be a government agent or a celebrity like Elon Musk, offering to give you money if you send cryptocurrency. There's a variety of tactics, but they all end the same way. Your cryptocurrency is gone and you get nothing in return. Be suspicious of anyone who tells you they can make you a fortune if you give them your cryptocurrency to invest, and stay away from companies that insist on being paid in cryptocurrency. If you do come across a scam, submit a complaint to the FTC, the Commodities Futures Trading Commission, the Securities and Exchange Commission, and the cryptocurrency exchange you used if you sent money to a scammer. Number 3, hackers. Because cryptocurrencies are stored in digital wallets and all transactions occur online, hackers are sometimes able to get a hold of other people's cryptocurrency despite the security measures in place to prevent this. Back in 2014, a Tokyo-based cryptocurrency exchange named Mt. Gox had a file for bankruptcy after hackers stole the equivalent of $460 million in US dollars. And fun fact, I believe Mt. Gox actually used to be a Magic the Gathering directory, I think. Or basically somewhere you could buy Magic the Gathering cards, or it was like a forum. And that's not the only time this sort of thing has happened. You have to be proactive if you want to keep your cryptocurrency safe. That means avoiding scams and only working with legitimate cryptocurrency exchanges. Research the exchange's security to see how it protects your money and make sure you're comfortable with this. Compare with other popular exchanges before you decide which one you want to invest with. You could also consider storing your cryptocurrency in an offline or cold wallet, although you open yourself up to the possibility of physical theft if you leave it lying around. But you could pretty much, like, if you are someone just trying to get like their foot through the door into cryptocurrency, I believe there's a link down below in the description where you could join Coinbase. Coinbase is a pretty popularized, basically like in the norm for most people. Like most people have heard have heard of Coinbase. Coinbase also recently IPO'd. So if you want to put money into one of the largest cryptocurrency companies that has shareholders and all that and is publicly traded, that might be an option as well. Now, also for like another side thing about hackers, never click on anything from a text message from someone that you do not know of, because a lot of scammers and spammers will like send like phishing texts or phishing emails, and if you click on it, you could end up compromising all of your devices, which could cause a hacker to end up hacking it, and that's not a good situation you want to be in, especially if you have cryptocurrency. Number 4, password loss. If you lose the password to your cold wallet, you could lose access to your cryptocurrency permanently, even if you got the wallet right in front of you. If you have a hot wallet, one that's connected to the internet, then you might have to worry about other people holding onto their passwords. One particular devastating case happened in 2019 when Gerard Cotton, founder of Canadian-based cryptocurrency exchange Quadriga, unexpectedly died. He was the only person who knew the exchange's crucial passwords, and without that information, his clients were unable to access the combined $250 million in their accounts. This understandably led to an uproar, causing some to go as far as to demand Cotton's body be exhumed to prove he was actually dead and not scamming them. As it turned out, the exchange was later determined to be a Ponzi scheme as well. What a double whammy. So it's up to you to decide where you feel more comfortable storing your cryptocurrency, but understand the pros and cons to each approach. If you use a cold wallet, memorize or keep your list of passwords somewhere secure along with your wallet where others won't find it. You'd never be able to take all the risk out of cryptocurrency, but by following the tips above, you can reduce your odds of loss somewhat. And if you don't feel comfortable investing into cryptocurrency, given all the ways you could lose money, you could try investing into cryptocurrency stocks instead. These are stocks of companies that stand to benefit from increased cryptocurrency adoption, but they can still be strong companies in their own right. So if the crypto bubble does burst, you won't lose everything. So for example, stocks like these are basically Tesla, MicroStrategy, I believe Voyager, and Coinbase. Now Coinbase is literally dealing with cryptocurrency, but they're making so much money off of the trades that are done on their platform that they're a pretty good bet. That being said, if you bought their stock at IPO, you would have lost a lot of money, especially if you were to sell right after, because it dropped heavily. But Coinbase, their stock there's probably a pretty good chance that they would get to a pretty high valuation just because they're basically the largest and the first of their size to go public. And there's a lot of money behind them. They made a lot of money and they're doing some pretty interesting things. And apparently there's some things that are probably going to come out in a few years where Coinbase is probably going to be doing some pretty amazing things in the cryptocurrency field, which might change things in the future, right? Like they might have a really good hold on the cryptocurrency market, or at least the market share in cryptocurrency. So if the next 5-10 years, the majority of people who end up putting money into cryptocurrency are still doing it with Coinbase, then that's going to be a pretty good sign for them, and they're probably going to make people a lot of money in the future. Feel free to watch more. Check out 40inbox.com and learn how to master your money below, where you can learn how to follow a very simple and easy to follow along plan to master your money so that you can control your money and not feel controlled by your own money, right? It'll help you get out of debt. It'll help you create a budget. It'll help you everything you need to know, right? In a very simple and easy to follow along pattern. Now, if you want to learn how to make money online, if you want to learn how to make money online, go down below as well and learn. We'll see you in future episodes. Peace out.